Hi everyone, welcome to my YouTube channel. My name is Tabitha, and if you're new to this channel, subscribe for more videos. Subscribe for more videos. Today we are going to talk about payment for periods, and every companies they have employees that they will pay after doing a certain job for them. So these are accountant, finance department, sale department, marketing departments, all those people they need to be paid. And the payments is a salary when it's paid, when it's fixed and pay annually. So this this salary is supposed to be divided by pay period, because like someone will not wait for the whole year to get paid. So today we are going to do that, how to calculate salary per pay period. It's supposed to be straightforward formulas. Salaries paid per period will be annual salary divided by the number of days. So let's say, for example, a company pays you weekly. So it will be the annual salary that you had divided by 52 weeks, because in a year, we have 52 weeks, unless if it's leap year, and the leap year have 53 weeks. So let's see. Pay per period frequencies. So every company is different, and other companies they do bi-weekly, others they do weekly, others they do semi-monthly, and others do monthly. So it's depends with which companies. Like for example, Amazon they pay people weekly. Some other companies mostly they do bi-weekly. Weekly salaries will be equal to annual salary divided by the number of pays. Hourly rate will be now getting the salary pay per period. So how much do you earn weekly divided by the number of hours do you work that week. Same thing too, you can get the annual salary divided by the number of hours you work for the whole year. So daily rate would be when you use now the number of days that you work. So how much do you earn per day? So we'll take salary per pay period divided by pay period working days. So let's say, for example, you got 700 a week. So that's 700 a week you divide by the number of days that you work. Let's say you work 5 days, and then you divide by 5 days. For daily rate too, you can also use the annual salary divided by the annual working days. So how many days did you work for the whole year? So that's another formula too. So either that you can use any of this, but you still find the same answer. So let's see. Example, a child earns 36,400 a year and is paid weekly. So now the pay period number of days will be weekly, and then you have 36,400 a year. A child works seven hours a day, 5 days a week, for a total of 35 hours a week. Annually, yeah. A child works 260 days, which will be 5 days times 52 weeks. So this is how you get that to 260. Take the 5 days that he works, and how many weeks that is a year is 52 weeks. So you get 260 days, and the hours you get 35 hours times 52 weeks. So 35 hours a week times 52 weeks will give you the total number of hours a year, which is 1,820. Her salary per pay period will be now calculated. You can use any of the formulas for you to get the amount that is paid per period. So weekly salary will be annual salary divided by number of pays. So let's see how does that work. So you take 36,000 400 divided by 52 weeks. So this is the annual salary, and this is the week, the annual week that he works a year. So you have 52 weeks a year. Every week you're working, right? Let's assume. So now you will have 700 a week. So that's the amount that you earn a week. So let's go ahead and see the hourly rate calculation. We give you that formula, the annual salary divided by the normal working hours, which is annually. This is the one that you are calculating by taking the hours that you work weekly times 52 weeks. So that will give you the annual hours that you work. So now let's see, which will 36,400 divided by 1,820 hours. This is when you're using the formula for annually. So hourly rate that this person earned is 20 per hour. So you take the annual salary divided by the annual hours that you work for. So sometimes you can use the hourly rate too by taking the salary per pay period divided by the pay period normally working hours. So 700 a week, that's what you earned, and you work 35 hours a week, so you get $20 per hour. So that's the other way of you calculating that. So daily rate calculation will be, you take the daily rate is equal to the annual salary divided by the number of working days. So this is how, when you are trying to determine how much do you earn a day. So another one would be 36,400 divided by 260 days. That is when you're using the annually formula. So in a year, when you work 5 days a week, you're working 260 days a year. So which will give you 140 a day. So this is your daily rate. This is the amount that you earn every day without before tax, right? That's what it is. So the daily rate, when you use pay per period, you will take the pay per period divided by the working days of that pay period. So which would mean a week. So you have 700, you earn 700 a week, and you work 5 days a week. So when you divide by 5, 700 divided by 5, you get 140. And all this is, you can use either, you can use the pay per periods, or you can also use the annually. And for you to get the pay per period, you have to determine the pay frequency. Is it weekly, bi-weekly? That's the first thing that you need to calculate before you do all this stuff. So now we are at the end of the video, and if you have not subscribed to my YouTube channel, please subscribe for more videos, and I will see you next time. Bye and thank you.